In recent months, India's cryptocurrency landscape has witnessed a dramatic shift in regulatory scrutiny, with the Income Tax Department issuing over 44,000 tax notices to crypto traders across the country. This wave of notifications is not just an isolated event. It marks a significant turning point in how authorities are addressing the fast-growing digital asset economy and ensuring that those who trade in cryptocurrencies adhere to the nation's tax laws. To understand why such a large number of traders are receiving these notices, it's essential to examine both the context of India's burgeoning virtual digital asset (VDA) market and the evolving strategies of the government to tackle tax evasion in this sector. Cryptocurrencies, once seen as a niche investment, have exploded in popularity among Indian investors, especially in the wake of global adoption trends and the promise of high returns. However, this rapid growth has brought with it a host of regulatory challenges, chief among them being the accurate reporting and taxation of crypto-related income. The issuance of these 44,000-plus notices is part of a broader, multi-layered initiative by the Indian government to clamp down on tax evasion and improve transparency in digital asset transactions. At the heart of this effort is the Central Board of Direct Taxes, CBDT, which has leveraged advanced data analytics to match individuals' tax filings with actual transaction data sourced from virtual asset service providers, or VASPs. These are the exchanges and platforms where users buy, sell, and trade cryptocurrencies. Through the Nudge program, the Income Tax Department has sent over 44,000 emails and text messages to individuals suspected of not fully disclosing their crypto transactions. This program is designed as both a reminder and a warning, urging traders to update their tax returns to reflect all crypto-related gains and activities. For many recipients, these notices have served as a wake-up call about the seriousness with which the government views compliance in the crypto sector. But the question remains, why now? What has prompted such an aggressive stance by the authorities? The answer lies in the convergence of several key factors. First, the sheer scale of trading activity in India's crypto market has made it one of the world's fastest-growing hubs for digital assets. With millions of users and billions of dollars flowing through exchanges, the potential for tax evasion is considerable. Authorities have become increasingly concerned that a significant portion of these transactions, particularly peer-to-peer trades and those involving offshore platforms, are not being reported accurately in income tax returns. Second, the government's move aligns with a global trend of tightening oversight on cryptocurrency taxation. Countries such as the United States have recently finalized new rules requiring cryptocurrency brokers and payment processors to report user transactions directly to tax authorities. The U.S. Treasury Department, for instance, has taken steps to ensure that all crypto gains are reported to the Internal Revenue Service, serving as a model for other countries, including India, to follow suit. This international momentum has emboldened Indian regulators to act decisively in closing tax loopholes and improving compliance. The notices themselves are more than just administrative reminders. They come with the weight of legal and financial consequences. Under India's Income Tax Act, failure to accurately disclose crypto income can result in steep penalties, including fines of up to 200% of the unpaid taxes. In some cases, the government has also initiated reassessment proceedings, surveys, and even search and seizure operations to ensure that suspected non-compliance does not go unchecked. These actions signal a clear message. The era of lax oversight in crypto trading is over. For many traders, receiving such a notice can be alarming, especially if they were unaware that their crypto transactions were subject to taxation. However, the government's approach is not solely punitive. The Nudge program, for instance, encourages voluntary compliance by giving individuals an opportunity to amend their filings before harsher measures are taken. By providing a pathway for traders to come clean and pay any outstanding dues, authorities hope to foster a culture of transparency and responsibility in the crypto space. It's important to understand what triggers these notifications. The Income Tax Department uses a range of data points to identify potential non-compliance. These include discrepancies between reported income and the volume of crypto transactions, sudden spikes in trading activity, and information shared by VDAs as part of their regulatory obligations. In some cases, even small-scale traders have been flagged if their transactions appear inconsistent with their declared income or if they have failed to mention any crypto dealings at all in their returns. For the broader public, this crackdown serves as a timely reminder of the legal obligations that come with digital asset investments. While the technology underpinning cryptocurrencies offers anonymity and decentralization, the regulatory environment is quickly catching up. Governments around the world, India included, are deploying sophisticated tools to trace transactions and ensure that tax revenues are not lost to the digital economy. Looking ahead, the implications of this enforcement drive are far-reaching. For one, it paves the way for more robust regulation of the crypto market, including clearer guidelines for reporting and taxation. It also signals to international investors and companies that India is serious about creating a level playing field, where all participants are held to the same standards of compliance. For traders and investors, the message is clear. Ignorance of tax laws is no longer an excuse. Those who have received notices are urged to review their past transactions, consult with tax professionals, and make any necessary corrections to their filings. Even those who have not yet been contacted should take proactive steps to ensure their crypto earnings are accurately reported, as the government's data analytics capabilities continue to improve. In summary, the wave of over 44,000 tax notifications to crypto traders in India is the result of a concerted government effort to close the compliance gap in one of the country's most dynamic financial sectors. By leveraging advanced technology, collaborating with service providers, and learning from global best practices, authorities are sending a powerful message. The days of unchecked crypto trading are coming to an end, and responsible participation in the digital economy now requires full transparency and adherence to the law.